Hey everybody, MortgageSeth here. Happy Fed Day. It's Wednesday and the Fed is having their meeting. So I wanted to just give you a quick update on what the reality of that is. They're expected to cut rates this week. So what does that mean to you? It might surprise you, but sometimes when the Fed cuts rates, mortgage rates don't respond very well and they can actually move a bit higher. Why is that? Because the Fed only controls the Fed funds rate, not mortgage rates. That's a very short-term overnight lending rate. Mortgages, as you know, can be out there for 15, 20, 30 years. And because of this, mortgage lenders are more concerned with inflation because inflation will erode the buying power of the fixed payments that they receive over time. So when the Fed cuts rates, they're trying to spur economic activity by making borrowing costs for businesses cheaper in the short term, as well as other things based on the prime rate, such as home equity loans and credit cards. And that's where you'll really see the biggest impact of a Fed rate cut right away. If the Fed cut is perceived to be successful in sparking more economic activity, businesses may improve, which means that they might have some additional pricing power, which can be inflationary. The bond market, they might see that as bad news for the longer term rates, and mortgage rates could actually go higher even though the Fed has cut the Fed funds rate. We often see this in reverse when the Fed hikes rates and mortgage rates go lower, and a lot depends on the comments from Fed Chairman Powell after the announcement. So if he sees rate cuts as sparking inflation, then we may have a problem with where the mortgage rates are going. So anyway, count on me to interpret all this for you. You don't have to be the expert. That's what I'm here for. But the biggest impact is going to be tomorrow when the comments come out from the Fed meeting, the biggest impact on the mortgage markets, because we're really going to wait and see what the traders have to think about what the comments are from this meeting. And just let me know how I can help you interpret this. I'll be here for the long term to let you know what's going on, when it's time to lock rates, when it's time to float, when it's time to be a little more cautious. I think overall, the market is expecting mortgage rates to go down over the next 6 to 12 months, but we may see a little bit of a roller coaster after the meeting today and the announcement tomorrow. So let me know how I can help. Call, text, email, or visit my website, mortgageseth.com, and I'll be happy to give you the real news on what's going on. Have a great day.